Well, it's Thursday evening. We're back on YouTube. Welcome to the Financial Thing Thursday night weekly live stream where we talk about peer-to-peer lending, crowdfunding, stock market investing, cryptocurrency. I'm going to say it back on the new channel. Thank you to everybody for tuning in. So back on the new channel. Hopefully everything is going to be all good this time. If you can do me a huge favor, just please subscribe to the channel. Key is going to be getting back to that 1,000 subscriber level as quickly as possible. We're rebuilding from the ground on up. Got a slap on the hand. Gave away something we shouldn't have given away. And despite the appeals, 2 appeals I went through, both were denied, saying that the channel was harmful and it conducted things that were not in line with YouTube's community guidelines and what they deem to be safe for you as a viewer. Okay, well, you know what it is, and I'm going to still continue to fight to get the channel back. It's been banned. Right now, it's still banned, but whatever, life is full of ups and downs, right? We all go through them. This was a big blow to me personally on a work level, emotional level, just being 100% transparent out. I put a lot of work into this YouTube channel for close to 5 years. And, I was really starting to get going at the time when it was taken down 3 weeks ago. But you know what? It is what it is. And I will just come back and make this new channel stronger and kind of be able to do the things that I've wanted to do as far as incorporating some of my loves in life, which is riding, incorporating maybe the motorcycle vlogging into the investing side of things. And it'll just be a more interesting channel. I'll continue to be here as long as YouTube allows me to be here. And I'm going to toe the line. And, don't worry, we'll still be doing what we had planned to do. It'll be through our email list. So if you haven't signed up for the Financial Thing email list, I highly recommend that you go ahead and do that. You can do that by going to the website. There's a bar on the side of the website. I'll show you how you can sign up. Go to financialthing.com. Let me show you how to do that right here. Bingo. This is the website, financialthing.com. Go down here, right down at the bottom, in the middle of the page, top 5 peer-to-peer lending sites revealed. Just put your email and your first name, and you'll be on the Financial Thing mailing list, and you'll get information about what I planned to do 3 weeks ago. We will do it through email, and we'll get it done. So hopefully the channel will continue to remain in good standing with Mr. YouTube. And also, please hit that thumbs up button if you can. I'd appreciate that. It helps with the algorithm. The idea is, this channel is obviously starting from base 0, and the more help I can get from you as a subscriber and a viewer, the easier it will become for me to just really build the channel back up. And my goal has always been to provide information. That's what I want to do. I want to provide as much good information as I can for as many people as I can reach. It's my passion in life and my goal. This has never really been about money or anything like that, because obviously I don't really make money off of YouTube at all. Thankfully, we do have a great sponsor who is supporting Financial Thing in the channel. I do keep things unbiased. This sponsorship doesn't bias the way that I report things about peer-to-peer lending in general or that company. So this is our sponsor, Cufflink. You can sign up. Cufflink is a real estate lending company, peer-to-peer. You can invest if you choose to decide. Do your due diligence, of course. They are somebody I've been investing through myself personally for the last I think 3 or 4 years, and no complaints so far. But you can sign up, get a cashback investment bonus. So join.cufflink.com and slash financial thing. So yeah, if you decide you want to do that, you can go ahead and do that. So again, thank you to Narinda over at Cufflink. We're going to be talking about a lot of stuff today. We have a lot on the menu, And of course, we'll be done in under an hour. As always, let me know if you can hear me loud and clear again. Thanks to everybody for spending your evening with me. I know you have a lot of choices of things you can be doing, but we're going to do our usual Loanpad update. We're going to talk about, what are we talking about? Assets, capital, CrowdProperty, Proplend, a little bit of British Pearl news. London Capital and Finance has been in the court system. We will talk about lending, whatever, funding secure, how we had a very favorable court ruling on this 5% fee rule, which is really great. Hopefully that'll make a difference to the administration, how much investors get paid back. We're going to talk a little bit about cryptocurrency and electricity usage. There's a great study that came out from the University of Cambridge. It has some really good information too on that website, which I'm going to show you 1 second. Yes, we have the green shake. You probably can't see it, but the green shake is in effect. Good healthy cleanse today. And yeah, if you have any questions about your investment, what you want to know about peer-to-peer lending or other types of investing, pop it in the chat. I'll go through everything as I do every week. And we'll go from there. Again, hit that thumbs up if you haven't already. I don't need to nag all 57, 58, 60 people on the stream about doing that. Just go ahead and say hi to Norman P., Mike Powell in Southampton, Paul Bagworth, and very cool, dry Kenilworth. Norman, of course, is in Sussex. Steve Mann in Solihull and Birmingham in the UK. We got Stephen Green from Southport. Stephen Hale from a warm, then cold, then warm, then cold, then warm, then cold Nottingham, home of Nottingham Forest. Phil W. in the Wirral. Wow, that sounds cold. Keith in Lincoln, home of the Lincoln Cathedral. Colin Perry in the beautiful Peak District, not to be confused with the Lake District. John Morgan from a overcast and rainy Swindon. Paul from Portsmouth is here. Eggenby, welcome back. Thank you very much, Eggenby. Very much appreciate that. Will Chica Boy find us? I don't know. Peter Clark in Huntingdon. Philip Waters, Milton Keynes. Cooler than yesterday. Hello from Nottingham. John Day. All seen Mike's news. I don't know what Mike's news is, so maybe you could tell us, John, what Mike's news is, because I don't know what Mike's... I don't even know who Mike is. Maybe you talk about Mike Powell. Could be another Mike. Could be Mike Jackson. Probably not, since he's no longer with us. Who else do we have here? Double dividend Dave Dawson here from Staffordshire. Peter Vince from Leatherhead. Welcome. Thanks for joining us. Alan Lomas in Chesterfield. John Cutler is here from a very and slightly pleasant Blackpool. Very windy. Barry. Joe from Lee. Greater Manchester. Very nice. Paul New from Stockport in Manchester. That's by the coast, I think. One of my closest friends lives in... close to, or used to have his offices in Stockport. Linda Baker in Buckinghamshire. Yes, the gang is back. Hi, Dave West in Chile, Newcastle. Alan in Basingstoke. Natalie G, welcome back. She said, thank you very much, Natalie. I'm glad to be back on YouTube. Hopefully we'll do everything right this time and not get our wrists spanked. Ow, yeah, that hurt. Yes, thanks, Paul, for the welcome back. James Blight in Durham. Home of Durham University, actually, where my niece went to study political science. Cheeky Boy is here. Debbie at Mixed Media Arts from the very sweaty Cayman Islands. Susan Williams, great to see you. Lawrence, she said, thank you, Susan. Very much appreciate you being back here, and thank you for the support. Jackie Honor is here. Annabelle Nyrin, buenas tardes from the Costa Blanca. ¿Cómo está? Annabelle, near and hopefully bien. Annabelle says, can't see him yet. Can anybody else? Hopefully you don't have tech issues. Mike Pat says, do I own the content and therefore have the right to get it back? You know, I do own the content, but the problem is YouTube has completely banned the account, so I have no access to the content. But most of it I did have saved on my Mac, so power backups, right? Make sure you back up your computer. So I will hope to release that content on the new channel. I already have been putting some of it up on there. So you'll see things kind of trickle in there. If you can, again, please hit that subscribe button. I would just love to get back to that 1,000 subscriber limit as quickly as I can, because that, again, is how the channel gets monetized moving forward. Go on the channel, hit the subscribe button. Very much appreciated. Yes, it is good to be back on YouTube. I'm not going to lie. Facebook is great, but eventually we're going to be streaming on Facebook and YouTube at the same time. So that's the plan. Hi, AccuChat. David here from Chilton's. And Annabelle, I think everybody else can see me, so hopefully you just got to put your glasses on or your contacts in. Jackie said, you had a haircut or had your ears lowered. Very smart. Phil, so it wasn't the sponsorship that got you banned. I don't believe so. No, I think it was the giveaway. There's a lot of cryptocurrency scams on YouTube, and YouTube's very sensitive about what you can and can't do. There's all kinds of terms and conditions. Obviously, they didn't like what we did on the channel. It would have been nice to get a warning and say, hey, don't do that again, and I would have been completely compliant, but you know, YouTube is a private corporation. They can pretty much do whatever they want. So there you go. Let's see. George Batchelor here from Bridlington. John Cutler says bracing. That's something we use in Skegness. Bracing. Hearing at double voice. Okay. Got double audio. I must have two mouths. Let's try maybe. Wonder why that is. Okay. AccuChef said, did you still do the thingy last week? No, we did not, AccuChef. That actually got the channel banned, so we will not be doing that, but we'll be doing it over email. So that'll be a private thing. And through the Facebook group too, if you want to join the Facebook group, you are welcome to do that. And we'll do our own private stuff on the group and via email. You said stereo is back. Well, I wonder what. Oh, hold on. Maybe that's it. Maybe that should take care of hopefully the issue. Yeah. So yeah, join the Facebook group. And anyway, we're gonna get started. Welcome to everybody again. Thanks for joining us. Let's talk about what's going on with Loanpad this week again. Just slow and steady. Very, very happy with what's going on over there. If you haven't got a Loanpad account, definitely one of my top 5 peer-to-peer lending companies at the moment. Let's see, so 61 loans, up from 59 last week. So again, continuing to increase the loan book. We're keeping the loan to value still low at 39%, which is why I consider Loanpad to be a good proposition. Keep that loan to value very low, and you're not going to get paid a ton of interest because of it. But again, it's all relative with the safety. Of course, no peer-to-peer lending is safe. Remember, here's my disclaimer right there. Just remember that FSCS does not cover any peer-to-peer lending investments. So do be aware that anything we talk about is an investment and is at risk of losing your capital. But different peer-to-peer lending companies do have different levels of risk, what I consider risk, and to be certain levels of safety. So Loanpad is one of the lower safety amounts, I believe. Anyways. But again, do your own due diligence. And so what else they got going on? It's still the same. They've still got the 6 extended loans and the single default. But Cedars has raised £400,000 on behalf of Loanpad. So that's good for them. I think they were trying to get a couple of 100,000, but people seem to believe in Loanpad and what they're doing. They will hopefully be profitable by the end of second quarter of 2021, which is a good thing. A lot of peer-to-peer companies really struggle with reaching levels of profitability, and that's an important thing. So Loanpad has a pretty low operational expense, which is good for them. Not really underwriting their own loans because they have their lending partners that they do that through. By the way, one of the things I love about Loanpad, aside of the daily interest, is that they have a first position over their lending partners who have their own skin in the game, which again is why I consider Loanpad to be one of the lower risk tiers of peer-to-peer lending. So that means if there's a problem with a loan and there is actually a capital loss, that the lending partner will take the brunt of that capital loss before Loanpad and Loanpad's loan investors. It's a huge point. Very unusual, very unique situation that Loanpad has with their loans and the way they're set up. It's a great thing. Louis over there, the CEO, really tries to lower the investors' risk as much as he can. So cool thing with that. Assets capital. So Stuart Law mentioned this week that they may limit investments coming up here. I think what's happening is obviously they're starting their new lending. It's been paused for several months. And so they have a lot of cash on the platform. What that creates is this cash drag. There's more investment demand than there is loan supply. So they may at some point say, hey, we're going to limit how much you can invest through the platform until they can get that new loan supply up and moving. They haven't said whether they'll definitely do that, but they mentioned it's a possibility. And they're supposed to start lending again late April to early May. That's when you'll really start to see these new loans come in if you want to do manual lending. Again, I've had a pretty mixed luck when it comes to manual lending. I've got quite a few loans in default. Again, that's due to inexperience when I picked out these loans when I first began peer-to-peer lending, and I just would scan through things very quickly. I thought, oh, this loan looks okay, I'll take some of that. And I was splitting the cash that I was investing into lots of different loans. I mentioned this last week. I think it was 15 loans in default out of 40 remaining loans in manual investing. I don't tend to manual invest anymore through assets capital, mainly just due to the time that is limited for me to be able to really screen loans properly and pick out the right loans or what I think is the right loan. And I'm no expert when it comes to this too. If you're really going to be an expert, you've got to look at the financial statements, look at the business's history, and then really research the business owners to make sure that they're not people that you wouldn't want to loan money to. I just don't have time to do that because what I have going on the business side. So I tend to go for the access accounts. You just find automatic lending just so much easier. You get more diversification automatically. You don't have to worry about which loans are good or bad. And personal preference, do what's right for you. But Assets Capital has lent, £1 billion up to February 2021 and has repaid in February, they've repaid £120 million in withdrawals over the last 12 months to investors on the platform that have decided they want to withdraw. So £120 million, that is no small amount of money for a smaller finance company. In the grand scheme of things, Assets Capital is not a huge financial company. It's a very niche in the peer-to-peer world. They've been able to process £120 million of withdrawals. That's a good thing. I see that very much as a positive. Let's talk about CrowdProperty. They've reported their accounts for the 12 months ending in the 31st of March 2020, and they did see losses of £206,892 over the course of the year. Previously, their loss was £11,695 for the year. But they say the business has been profitable since October 2019, and accounts ending the 31st of March 2021 for CrowdProperty will show a profitable year. I mean, obviously, a lot of these peer-to-peer companies have been experiencing difficulties due to COVID. This is going to be across the board with many lending companies, not even peer-to-peer, but just general lending and property lending businesses are going to see their profits just have tanked because of COVID. So not unexpected. The question is, CrowdProperty, are they well capitalized through these periods of losses? And to be honest, £206,000 loss in the grand scheme of a finance company is not huge. It's doable. We've seen other companies like British Pearl have losses in the millions. So £206,000 loss manageable, and you'll see the new accounts when they get released at the end of March. Should be out now, I guess, or in the next couple of days. We'll look at those accounts and see how they did profitability wise. Let me have a drink. So generally, good news, I think. CrowdProperty, I'm still very happy with what Mike Bristow is doing over there. I will be reposting the CrowdProperty live stream that I did with him a couple of months ago. YouTube obviously took it down, but I'm still in the process of uploading and getting the graphics ready for those videos, putting them back up. So I had a really good chat with Mike, and also there's an interview that I'll be putting up that I did, I think it was January of 2019, where I sat with Mike in London. We talked, we did a video interview there. It was great. So I really like what Mike is doing. Seems to be very competent. Happy about that. And CrowdProperty, Mike has said they have a clear strategy that's going to enable them to reach £400 million in lending per year by 2024. I mean, that's we're talking almost half a billion pounds of lending per year, and this is not total, per year. So obviously they have a strategy for growth. During periods of growth like that, you're going to see differences in profitability too. If they're spending money on growth, profits levels are going to be lower. So it's going to be an interesting time for CrowdProperty. Proplend has launched a new investment product. Let me show you this on the screen. I thought it was pretty interesting. They call it AutoLend 2.0. I've kind of I have been to visit the offices of Proplend, and I think this AutoLend 2.0 is going to make just Proplend a better company to invest in. So now you have this AutoLend functionality, which will offer two products. Right here you can see always on and self-select. So always on is going to be the automatic lending product, and then self-select will obviously be the manual product. Let's see, you can invest in every loan or choose your investments on a loan by loan basis. Available funds are used to automatically invest based on your criteria. Remains in full control. See, AutoLend will invest up to the maximum amount you've set. AutoLend operates on a token-based system to ensure as many lenders as possible are able to invest in each loan. So for the auto product, they're looking at a passive 5% per year return. Average return was 7% per annum for 2018 to 2020. You're going to get that diversification with the AutoLend product of your money going out into many different loans. And then for this reduction, from 7% manually to 5% auto, you are going to only be invested in tranche A loans, which are capped at a maximum of 50% loan to value. So if Proplend are doing their due diligence correctly and writing good loans, this means you're going to be invested through the AutoLend into the better loans that they have on their platform. One interesting thing to note, if you turn off the AutoLend, you cannot turn it back on for 30 days, but you can still use the self-select. That's interesting. I'm not really sure why they've decided to do that, but because things like CrowdProperty, you're able to skip the next loan if you want to. I'm not really sure the deal with that. Maybe that's a programming thing. I haven't read the frequently asked questions about it, but I thought that was interesting. You can have your repaid capital reinvested automatically, and it can be activated in a classic ISA or a pension account. So again, I'm kind of a big fan of these AutoLend products, and I think AutoLend really opens the doors for more people to become invested through good peer-to-peer lending companies, because a lot of people don't have the skill to really invest manual selecting loans, nor do they have the time to really screen them properly. And I think when you don't take the time to do your own due diligence on self-selecting loans, you can really have issues with even just diversification, putting too much money into a single loan that goes bad. Or in my case, when I was inexperienced, investing in loans that really probably weren't the best loans to be invested in. And there are going to be different quality loans out there. So I do like the investment, the auto lending investment. Again, self-select, I consider it more hands-on for people that are more advanced. So yeah, that's pretty cool. I'm glad to see Proplend, introducing this auto lend 2.0 product. Let's see. British Pearl in the news. They've canvassed investors for their views on funding a new portfolio of homes developed in partnership with local councils in London. Basically, they are going to partner with a developer to create good quality refurbished houses and flats to rent to homeless people, so the government will be paying those rents, really welfare housing. Which is cool, I don't have any problem with that. I would imagine if you can get your rents covered by the government, that's a pretty so-called safe investment. Now, one more is troubling to me is, as British Pearl hasn't exactly been a great business model. They decided to sell their entire peer-to-peer lending portfolio during COVID, and their accounts during 2019 were 5.2 million in losses for 1 year. So it doesn't exactly give me a lot of faith and comfort to say, well, British Pearl, you're creating a new product now when the old product failed. Voluntarily, do we want to go and invest in that? I don't know. Personally, I probably wouldn't, unless they could show me something that would really knock my socks off. So the UK government has launched a peer-to-peer lending platform, business-to-business lending platform called Boris and Buddies, backed by Russian institutional investors. That one almost had me today. I forgot it was April Fool Day, and two people have gotten me pretty good today. The news story of Boris and Buddies got me for just a few seconds until I read that it was backed by Russian institutional investors, and I knew, of course, it was a joke. So, haha, that was a good one. That was the peer-to-peer finance news website who got me pretty good. London Capital and Finance. Well, let's talk about Funding Secure and this news story, because some of you I know are invested, and I'm going to show you this news story because I think this is pretty cool. Now, I don't have all of the information about, I didn't read the court papers on this, so I'm just reading what I read off the news site. But victory for Funding Secure investors in fee dispute. Funding Secure platform had argued that the fee of that 5% fee on redemption of all defaulted loans, there was an argument as whether that should be on the full loan amount or on the recovery amount, but still a terrible rule for a company that's in administration. So, for anybody that doesn't know what's going on in that case, if you're a new watcher or you're watching in the future, Funding Secure is a peer-to-peer lending company that's gone into administration, and during the administration, their loans that have gone into default and are being recovered by the administrators, there was a 5% fee that was being kept back to pay Funding Secure as a platform, and they were getting that money before investors were being repaid on any recoveries. So it went to court, and it was disputed. People who were involved in the court case were saying, this is unfair, it's not good, shouldn't be allowed. And the court ruled, the Honorable Judge Pierce ruled that investor capital should be first to repaid, followed by investor interest. Then Funding Secure's 5% redemption fee. Thank you very much for everybody that really pushed for that. I think this is a great victory, and hopefully this can roll on to the Lendy situation, even whether any money is recovered in that or not. But this is really good news. It means that investors get paid back first, and anything that's left over gets paid to Funding Secure, which is the way it should have been. I mean, the terms and conditions are written the way they were wrong. It's just bad. So yes, that's a great victory for people that have been people that invested through Funding Secure and now in administration. So very, very happy. It's a really good piece of news, and makes me smile to see things like that happening. the victory. I would say a victory for the peer-to-peer lenders in that one. Lending Capital and Finance, the people who are invested through that collapsed company, not so good news for them, but the High Court has ruled that Lending Capital and Finance bondholders will not be eligible for FSCS compensation. Really because Lending Capital and Finance claim not to be regulated for issuing bonds because the bonds issued were non-transferable. The judge has agreed that should be unfair and unenforceable, but the judge declined to find that the bonds were regulated, and as a result has declined to set aside FSCS money, and is basically standing by the FSCS not to protect bondholders. So basically bondholders are going to take big capital losses. Again, I've always said this, I'm not a fan of bonds, private bonds like that. Very, very risky, hence the mini bond crackdown that's happening by the FCA, especially with marketing and whatnot. So really a big disappointment, I'm sure, for anybody that was invested through Lending Capital and Finance, that 11,000 investors are going to be left with £237 million of losses. So again, not always just peer-to-peer lending that's taking a beating. There are bigger companies that were institutional companies offering products to regular retail investors that didn't work. So bad news for them. Look at the interest rates. I've gotten 2 emails in the last week. Forward money markets dropping their interest rates again. I've been saying this for months that we were at 1% at one point, and we just see it continuing to drop. Forward money coming down to 0.3% in interest in their savings account and 0.4% for Marcus. So there you go. That's what's going on in the most of the peer-to-peer lending news. Let's have a look what else we have here. If you also have questions, please go ahead and put them in the comments. We're going to talk about a little bit of tax stuff about cryptocurrency for anybody that is invested in and buys and sells that, what the capital gains situation is, because you do have to pay capital gains tax in some situations. So we're going to kind of run through that a little bit. We've seen the Bitcoin prices have really been dipping and going back up, and we got close to 60,000 US dollars. I don't know what the price is right now. Let's have a look. See how we're doing today. We saw that kind of big dip last week. Yeah, about 58,676, and Ethereum $1,962, so has rebounded well. I think what you're going to see right now is this sort of like that, going horizontal with the prices for now. As things kind of settle down a little bit, and then I predict, if we use the crystal ball, that we're going to just see the next price bump, hopefully heading towards 65, 70, 73,000 US dollars. May take a little bit to get there, but I do believe that is coming. So if you have questions, about your peer-to-peer investing, what you think. My top 5 list is going to be updated this week, hopefully by tomorrow. Really hasn't changed. The only thing that's going to be removed out of there will be Octopus Choice. Probably replaced by CrowdProperty, but it's still the same as it's been. If you want to go and get the top 5 list, go on the website and just sign up for the mailing list. You can get my top 5 peer-to-peer lending list. Nothing has really changed on that. Let's go ahead and talk about if you own cryptocurrency and you sell it. In the UK, 2 different rules. I know we got some people that watch in the US, so obviously these will do UK and US. US capital gains tax exempt to £12,300 for 2020 and 2021. So any capital gains up to £12,300, not going to pay any tax on that. Can be bigger also, that threshold, if you claim marriage allowance. And if your income is above £100,000, your personal allowance goes down by £1 for every £2 that your adjusted net income is above 100,000. So if you earn £125,000 a year, you're not going to get any capital gains tax release. But also you can claim against losses in the UK. If you have some losses on cryptocurrency, you can use that as a tax write-off. And also if your coins become worthless, you can use that as a tax write-off too. Go to the government website and read all the stuff that's on there. It's, I'm not an accountant, just kind of giving you basic information. Know that if you do buy and sell cryptocurrency, you make a profit and you are over your capital gains tax exemption amount for your investments, you are going to have to pay capital gains tax on that. US is a little bit better. If you live in the US, you have short-term and long-term capital gains tax. Short-term, is considered held anything less than a year. So if you hold your cryptocurrency for a year and 1 day, long-term capital gains is, obviously depending on your income, between 0 and 20%. See, there are different thresholds for that. So you can get away with 0% capital gains tax if you hold longer than a year, which is a lot of people try to do with their cryptocurrency, is try to hold it longer than a year. Let's see, where is our little... Here's our, I don't know, hopefully you could see this, but right here, this is in the US, the tax bracket for 2020 short-term capital gains tax brackets. Obviously, if you're in this very high tax bracket, you are going to pay capital gains tax of 20% for long-term holdings, and at your regular income tax rate if you sell your cryptocurrency within 1 year. So really best to try to hold the crypto in the US for longer than a year to bring your taxes down. So if you sold it, say you earn, let's see, $163,301 or more, you are going to pay 32% tax on any of that money that you make a profit on. If you hold it for longer than a year, you are going to pay, I think it's in the 15 or 20% range. So you could save some money if you do it that way. But the US and UK do treat capital gains tax differently for cryptocurrency. So yeah, that's basically the way it works. If you make a profit, also in the US, you have a $3,000 maximum loss limit on your cryptocurrency, and you can carry your losses forward for future years. So if you happen to lose $10,000 trading cryptocurrency, you can take that $3,000 a year for that first year loss and then carry those losses forward if you need to. So do keep that in mind if you are somebody that wants to move in and out of cryptocurrency. I'm a long-term holder. I really try not to do that, obviously for tax reasons. I don't want to pay capital gains tax on any profits, plus I'm a long-term holder of this cryptocurrency for tax reasons too. So just be aware of what's going on with that. Let's see what else. Visa, by the way, for anybody out there that thinks that cryptocurrency is like a fad thing and there's no value in it, Visa has a whole page in the US about cryptocurrency. They've been processing blockchain payments through the US stable coin, the USDC, which is a digital coin that's tied to the price of the dollar. So yeah, while it's not using things like Bitcoin at the moment, it is processing blockchain payments now, which is a big deal. I have tons of information about how they're going to be using crypto in the future. So this is not a fad thing or a flash in the pan thing. There's going to be more and more of these huge financial companies that are going to start using blockchain and bring more eyes onto the world of cryptocurrency. Let's see, there is an article here. If you want to get information too, Cambridge University has put out some really interesting information about electricity consumption, because we often hear about how much electricity is used to mine Bitcoin and how it's just not really efficient. It's pretty cool. You can see here, if you want to, I'll put it in the chat, if you want to look at this yourself when you have a minute. I think it's quite fascinating. I'll put the link in the chat for you. Total electricity production for Bitcoin, this would be transactions and mining represents 0.55% of the total world's electricity production. Yeah, I mean, it's definitely significant, but it's not terrible. I don't think it's terrible. And here's the thing: there are going to be ways of renewables that are going to help to do that. So, and these again are just kind of best estimates. These are not going to be 100% accurate, but go check it out because it's very, very interesting about the facts they have. This is one: the amount of electricity consumed by Bitcoin net year and network in 1 year power all tea kettles to use to boil water for 31 years. You know, my dad always used to tell me too that kettles was the highest use of electricity in a household. I don't know if he was right about that or not. But there is some interesting facts on here. This is updated every 30 seconds about the annualized consumption of electricity. But here's another thing that I thought was interesting. Coinbase put out an article that says the 7 biggest Bitcoin myths. I'm not going to go through all the myths because I really do want to get this down under an hour and answer your questions. But myth number 7, Bitcoin is bad for the environment. Bitcoin mining is an energy-intensive process, but determining the environmental impact is hard. For one thing, all aspects of the digital economy require energy. Consider the global banking system, all of the energy required to process bank transactions, power office buildings, ATMs, local branches, and more. So that's the myth. The real story: recent research from New York fund ARK Investment Management concludes that Bitcoin is much more efficient than traditional banking and gold mining on a global scale. A significant portion of Bitcoin mining is powered by renewable energy sources, wind, hydro, and solar. The actual number ranges from 20% to more than 70%, according to the Cambridge Bitcoin Electricity Consumption Index, which we just looked at. Cambridge researchers concluded Bitcoin's environmental footprint currently remains marginal at best. An argument can even be made that the economic incentives inherent to Bitcoin mining are helping drive sustainable energy innovation. That means renewable energies, as miners constantly seek to increase profits by lowering their electricity costs. In a world where renewable energy is fast becoming the cheapest option. Quite interesting if you think about it. People that are mining Bitcoin, right? The lower their electricity costs are, the more money that they make when they are able to mine a Bitcoin. So if they can use renewable energy like hydro, solar, they're able to make more profits on mining Bitcoins. Obviously, there's going to be incentives for them to do that. You know, it's kind of it's a debate. It's a debate. I mean, is it impactful on the energy crisis? Yes, of course. But there's many things that are much worse. Like electric cars are going to be a huge problem. Things like that. But Bitcoin is not as impactful as we might be led to believe in the media. We'll see what's going on with that. So again, go check that out at the University of Cambridge if you're interested in cryptocurrency and Bitcoin, which I certainly am. I'm a long-term holder of Bitcoin. Hopefully YouTube doesn't ban me for saying that. But yeah, I'll be holding it for the next 10, 15, 20 years, and probably till I'm in the ground. Hopefully I won't need to ever sell it. More and more institutions are coming on board. We're seeing it every week, and it's going to continue to be put more in front of retail investors. If you haven't gotten yourself any Bitcoin, you can do that. Go to financialthing.com, look on the cashback page. There's a link to Coinbase. You can sign up for an account and get, I think, £77 of a bonus for investing £77 if you decide you want to buy yourself some. I appreciate using any links on the website. Helps us out a ton. We're 11 minutes under now. Let me see if I can go through these questions. And thank you again for everybody joining and being supportive of the channel. Please hit the thumbs up and subscribe to the channel. I can't thank you enough for subscribing. I think we've gotten about 80 subscribers in the last few days. People just supporting the channel, saying, hey, thank you for doing what you do. Sorry to hear about the channel getting shut down. We'll get you back to where you were before. Obviously, it's going to take some time, but I very much appreciate every single one of you for doing that. See, Arthur Atchison is here in Belfast. Mark Burnett said, thank you. Glad to see you back on YouTube. Norman P, did we get any more info on Cufflink's auditors? We actually did, and I can't remember if I spoke about this last week, but Narinder, CEO of Cufflink, emailed me, and let me see if I can bring up what he said. Hopefully I didn't ignore it. Yeah, so they were being audited by Ernst & Young. Obviously, the accounts for Cufflink were submitted late. This was a problem due to Ernst & Young with the COVID situation. Everything was very backed up. But Narinder said they decided before that situation happened with the late accounts that Ernst & Young were just too big of a company for them to be using for the size of what Cufflink is. Probably very expensive for them. And they decided they were going to move to another auditor. It was kind of both agreed on both ends that this would be the last year that Cufflink used to audit Ernst & Young for auditing their taxes and their accounts. And also Ernst & Young have been under much scrutiny because of the London Capital and Finance auditing that they worked on and with the FRC. So they just didn't think it was worthwhile continuing with Ernst & Young because the fees that they were being charged was expensive for what they wanted to pay for a business of Cufflink's size. And they decided to move on. So it was a mutual split, and that was the news that I received from Cufflink about the auditing. So hopefully that gives you a little bit of information. So Blend Network had a new loan today. Yeah, I think they had a pretty big loan too. I was reading. A couple of tranches up to £2 million. See, Annabelle says, trying to transfer my ISA array setter to Cufflink before they close. Paperwork slow. Can this still go ahead now they're closed to us? Yeah, I believe you should be able to still transfer that. Just because the platform is closed to new investments, I'm sure people are going to be moving their ISAs out. So that will take some time. Dave said, didn't get all my interest off CrowdProperty this month. Seem to have a system problem. Sent them an email about it, but not heard back yet. I have not had that problem, Dave. Hopefully you get that sorted out. Paul said, have you looked at Easy Money? I had money in before the COVID and no problems, taking most out. The small amount left in is still paying interest on them. You know, I've tried to get into the Easy Money offices a couple of times when I was in London, but I could never seem to get them to agree to me coming in. And when somebody doesn't open their doors to me, honestly, I'm sort of one of these, yeah, do I really want to invest with you if you're not going to let me come in and talk to somebody, head of the company or a founder or somebody in charge? Again, I do that to bring you information, but it also makes me feel comfortable about investing through them. So I don't really have much affinity for Easy Money. I'm not saying they're good or bad. I don't know. They've just never had open arms. Neither has LendingWorks. Mike says, appears to have been some tech issues on CrowdProperty since the migration. There's a few moans on the platform. Annabelle says, it's saying I'm already subscribed, so if everyone else is too, then surely you've still got your 1,000. No, Annabelle, you'd have to subscribe to the new channel that you're watching this one on, so you may have just already subscribed, but no, the 1,000 is, all of those subscribers are gone. So I'm basically starting from zero again. Mike said, property lend still £1,000 minimum, even on auto lend, as I understand it, so you need to have funds on the platform. Agree. Darren is here. Chimpo Naughty, welcome to you, Darren, in Cambridge, home of the Cambridge study on Bitcoin electricity use. I like that. John, what is the loan flow like on Proplend? It's pretty decent. I get notified of new loans. I don't think it's super heavy, but they do have a consistent loan drip. And I think it will continue to get more and more as things sort of normalize back in the UK, of the country hopefully getting open back up soon enough. Dale Potter, do you have any thoughts on the UK property market strength this year? So many peer-to-peer properties are backed, and their security and downturn will affect loan-to-values. Yeah, property market I think will start to really recover. And here's the thing, I've been looking for some property just to keep an eye on down in Dorset, and I'm just not seeing a lot for sale pop up. I think the inventory is very low. We're having this problem in the USA too. So when there's low inventory, it can seem sometimes like the market's not very buoyant. But as that inventory starts to increase, when the market opens up, builders start to rise up in the building rates. And there's always going to be this problem in the UK about lack of building, lack of housing. So I think it may take a little while for it to get back. I would imagine the next 6 months you'll start to see the property market get stronger. Again, depends kind of on what happens with the COVID. And are people going to really get... Oh gosh, I can't even say that. I feel like I don't want to talk about, the V thing, but hopefully that gets sorted out. Things start to ramp up and get back to normal. I tell you, when they do open up the UK, I think you're just going to see the economy really start to take off, because people are going to do things that they haven't been able to do for a long, long time. And you probably see some money being spent out there. There'll be a bit of a euphoric return back to normal life. And maybe some of the things that we've taken for granted over the last few months, we're really going to enjoy going out to eat, maybe looking for new homes and things like that. So yeah, I think the property market will start to really strengthen, but it may take a while. One of my favorite movies, Boris the Blade, Anything to Declare. Yeah, Never Go to England. Snatch, right? It's a very good film. Dan Barber is here. Don't worry about being late. You can always catch up on the stream. It's going to be archived on the new YouTube channel. Mike says, don't count the funding secure chickens before they hatch. The money has apparently been spent and the administration might have to be suspended. Okay. You know what? If that does happen, okay, I'm still happy that the court ruled in favor of the investors, and it is what it is. I personally don't expect to get a lot of money back from any of these companies and administration. I'll be using it as a tax write-off and losses, but whatever happens with that, I'm happy that the court at least ruled in the favor of the investors and not the financial companies and the terms and conditions for once. So yeah. London capital financial investors will potentially be compensated by the government. Well, that's a good thing. I hope so. Paul New, do you only pay capital gains when you sell your Bitcoin at a profit? Yes, if you do only pay capital gains on profit, but you also you do have that capital gains tax exemption, so 12,000, a little bit over £12,000 depending on your income, so you can use that exemption before you have to pay capital gains tax. Yeah, go read the terms and conditions on the HRMC's website. Again, this is just information. I'm not a tax person, so I'm giving you the information that I studied. Yeah, there is a £12,300 exemption. There's different levels though on how much you can earn to get exemptions. John Morgan said, didn't know about the over £100,000 CGT allowance dropping £1 per £1. It's not, it's £1 per £2. So again, go check it out. Yeah, PayPal is definitely looking at cryptocurrency Big deal. Coronation Street coins, very good. Yeah, as Dave said, there's lots of odd tax rules. You really have to pay attention to it. You just know that in most cases, for most people that are not high income earners, if you do sell your Bitcoin, you are going to pay capital gains tax if you go over your exemption amount. Mark says, is it too late to jump into Bitcoin? No, absolutely not. We're still in the infancy stages of that. I continue to buy every month. It's going to take a while for it to hit the levels of where I think it's going to hit, but I think anything for, I think $200,000 US this year is very reachable. So no, not too late. Stuart Fletcher, can you talk more about index track funds? Any funds that stand out? Yes, two. Only two that let me say three. There's three funds that I use. Vanguard US Index Equity Fund, which is that's a broad market index tracker. You could also buy Fidelity's version. It's just as good. Fidelity has a US index equity tracker. Fidelity's World Index Tracker is a good one. And then I have used the Global Bond Tracker in the past, but I got to tell you, I've been sort of withdrawing out of that now. The reason, I just don't think there's going to be much movement in the bond, in the bond tracker as far as it increasing in value. It's definitely a way to asset protect. You're not going to get those huge drops if the market's correct. So I think it is a way to preserve some, amount of wealth inside of an investment portfolio. But it depends on your risk too. I've decided that my risk tolerance has really gone higher because I started investing in my early 40s, so I'm kind of way behind where your average person might be. I'm willing to stomach some more risk. The more invested into equities you are, the higher the risk. So if you're 100% in equities, you're taking a much higher risk than somebody that's 20% equities, 80% in a bond fund. You're just not going to get really much of a return in the bond fund, but you will get protection on the downside if the markets really dump. Like in March of 2020, when we saw this big drop in the equity markets, you didn't see the bond trackers really moving by as much amount. Of course, there was a drop in the bond tracker prices, but absolutely not the kind of drop that you saw with the equity. So depending on your risk tolerance, again, I think for me personally, I'd kind of rather take my bond tracker money and shove it into Bitcoin and just roll the dice because of the low returns. And, I've still got, I'm 40, in my late 40s, so I still got time to recover from any stock market correction. But if you're closer to retirement, you need that money. Bonds are a pretty good way of protecting your capital, which is important the closer you get to retirement. If you have time on your side, you're in your 20s, 30s, you have time to recover from any corrections. You can go more into the equity side of things. Again, really based on what your personal risk tolerance is. But US Equity Tracker and Vanguard, great products. And by the way, I think the US growth is, over the next year is going to be huge. We got this piles and piles of stimulus in the US going in, and it's going to really prop up the economy. So I think you're just going to see the markets continue to grow much faster than, for instance, the UK. So that's, again, why I stay invested in the US Equity Tracker market. I do it direct through Vanguard because for me is the cheapest way. As far as the other tracker funds, I really, I'm not doing the Europe ones. Not really doing the Asia. I think Asia could be something to look at. Again, I prefer just US. I believe in US companies and what they're doing, and they continue to go from strength to strength. So, but I'm sure there's opportunities in Asia for sure. So I hope that answers your question. Thank you everybody for subscribing. Very much appreciate that. Dave Dawson says, Houses selling like hotcakes here. That's great. Bigger issue with the cufflink accounts with the qualifications on the ongoing concern statements. Yeah. I did read the accounts. My mind is not fresh on it, so I'm not really comment on it. But again, I go to the source. The source tells me something. I do have to take that as being what happened. But yes, there's always concerning statements too in those accounts, though. I've read other accounts from other finance companies, and gosh, there's always some things in there that maybe go, ugh. Paul Bagworth, is Frank from Lendery still making an appearance? Yeah, he's scheduled to come on next week, April the 8th. So next week we're going to have Frank from Lendery. That is a German-based peer-to-peer lending company that is lending money to crypto traders through the platform exchanges. So we're going to get a really interesting chat with him about how that business works and maybe his views on what he thinks for cryptocurrency. Paul New, house prices have really gone this last 12 months. Gone up or gone down? Darren says Cambridge and surrounding areas building sites everywhere, housing and commercial. Paul says you seem to have some anti-Bitcoin people on your Facebook page. Absolutely, of course. Absolutely. So, and two, as far as Cufflink goes, my conversations with them is they're very well capitalized. A lot of their money that's capitalized is family money, so they do have skin in the game too on every loan. So I mean, you can go off of that. And again, we don't always know 100% what's going on behind closed doors, but Cufflink has always been very transparent with me. No guarantees. Again, I just report what I hear. So personally, I'm not concerned. Yeah, the U.S. stimulus, I mean, it's absolutely nuts what's going on. And it's funny, this is the reason why I'm so big on Bitcoin, is because this money printing has just gotten out of control. It's great because it really props up the economy on one side, but if the U.S. were to pull a plug on all of this stimulus, what would really happen to the economy? It'd probably just come crashing down. So how long can they continue to just do this and do this and do this? I don't know. We'll see. Anyway, we're going to wrap it up. We are just a little bit over an hour. If you have any other questions, pop them in to the chat. Bitcoin, I'm new to Bitcoin. Any pointers? Absolutely. There is a wonderful website resource that I believe everybody should look at. Even if you don't like Bitcoin, you're a naysayer of it. I will put the link in the chat. Some great articles on this website. It's called the Parker Lewis. His name is. Let me link you to it because I can't remember off the top of my. Hang on. I'm going to put it in the. Here we go. It's called the NakamotoInstitute.org. Any of these articles by Parker Lewis, just go read those. It answers all your questions about criminal activity. Is cryptocurrency useless? Has no value and it uses too much electricity? The first article on there too, by the way, is called The Great Decentralization. Bitcoin is the Great Definancialization. Love it. I think it's such a great article on it. Very smart. Go ahead, read that article, learn, and educate yourself. And again, thank you for subscribing, everybody. We are going to call this one a night. We'll be back next Thursday night, same time with Frank, hopefully all being well, from Lendery, coming in from Germany. And appreciate everybody being here. You guys are great. And the support has been amazing over the last 3 weeks for the channel. And I very much appreciate it. So you guys have a great evening. Be safe, be well, be happy. And remember, there is more to life than money. just enjoy. Take care. Bye.